Well, welcome everybody to another trading skill development using the Trade Bench platform. Today we're going to be talking about vertical credit spreads. They're going to be very similar to the debit spreads, as it's just one price in, one price out. However, it's a credit spread, so we finally get to use the short button instead of having everything be long. Let's jump right into it. First thing we want to do is get onto our training center. And let's go to the non-directional options. This is our first module, first course in the non-directional series. And let's go ahead and click on it. And we can see here, you guys have already watched this video. We're going to pull up ourselves. Let's start with let's do the bear call first, since it was the first one up. We're going to go through and once again just put these in as your entry criteria is going to be a checklist. I'm going to do this a different way today. Not quite different, but just a little bit. I'm going to set up both a bear call spread and a bull put spread as trading plans, and we can see which one triggers first. Well, I should say hypothetically, so they're both sitting there waiting to see what triggers first, and then we can trade them, even though we will do the whole thing. But this is kind of fun because when you're doing the simple trades like long calls, long puts, vertical spreads, anything that's just net credit, net debit, you have the ability to build it as a plan and wait for it to trigger. So I'm going to mimic basically what's going on here for the checklist. Now what's going to be cool is, since they are the exact opposite of each other, and you've heard me say this before, I can use the same checklist. I'll just call this credit spreads instead of debit spreads, because it's going to be the same time frame. They select the same deltas, so on and so forth. It's very, very similar. So let me go ahead and just move this over so I can type it into Trade Bench. So that's the next thing we will do is let's go to Trade Bench, go to our configuration, let's go to our strategies, and we would add the strategy here. Once again, I've already done this, and you can see that it is the bear call spread. It's the first one up top. Now what's neat about these is it's a mouthful, folks. Bear call, bear put, bull call, bull put. It's kind of confusing what comes first. So what I did is I put credit and debit in parentheses. That way I know which one I'm looking for. Now, another little lesson that's kind of neat, if you guys don't remember from previous classes, the direction is in the first word, and what you're used to trade is in the second. So this is going to be a bear, which is downward move, using calls. So we're going to use calls, which creates a credit. So kind of a fun little thing to remember things by. So we'll go ahead and edit this. You can see that I went through and I put it in here. I made it an active strategy, but as you can see, we don't have a checklist for it yet. I did copy and paste, however, the template in there as well. So let's go back and let's create, actually I'll just go all the way back to a checklist for this. Now I'm going to add this checklist and I'm going to call it vertical credit spread. Now this should be able to do it. Now you can see that I actually did it the bear put spread and the bull call spread down in here, that I actually did them individually. But I'm going to see if I can't get away with just doing it as one, because the deltas that we're selling and buying are going to be assumed on either side, just depending if you're looking on the call side or the put side. So I'll go ahead and hit submit so we get this thing up and running. There it is, the vertical credit spread. And let's go ahead and edit this. So I need to add a new checklist item, and I'm just going to copy this straight across from the, maybe I can highlight, copy, and paste. Let's see if this works, folks. Control copy, paste. Oh, look at that, it works. It worked. This is going to take a lot of, this is going to shorten a lot of time there, and I'll put time frame as 2 words. Okay, so select expiration matching the time frame. We want to do less than 3 weeks out. So if you're looking for a 10-day credit or a 12-day credit or 3-day credit, we want to stay short, because what ends up happening is if we go over 3 weeks, there might be something better to do. Something a little bit better. You might want to move into the diagonal spread at this point, which we're going to learn here moving forward. This is definitely manually checked. You could add any notes to it, but it's pretty self-explanatory. I'm going to hit submit, and there's our first item in the checklist. The rest is also going to be copy and paste. Kind of funny how I didn't know we could copy and paste these till we get through the sessions. But the software allows you, or deeper into these sessions, I'd say, the software allows you to do a whole lot. So as this is rendering, I'm going to go ahead and start the copy paste over to the other screen here. and hit add new check item. That's funny, it doubled it up, so I just delete the one. Very simple. And then I'll add the new. Apologize for the slow, but it's one of those days, I guess. Feels like a Monday. All right, so the next is going to be the sell the call, and I'm going to change this to strike. With delta between 0.50, and I'm going to go ahead and get the plus signs away because it's going to be assumed. Let's make sure I spelled strike right. All right, 0.50, 0.70. It's plus on the call side. It's minus on the put side, but it's equal. And they're the exact same thing. It has to be plus, right? And it has to be minus. So I'm going to submit this. I'm going to set up the next one, which is the buy side. Okay. Once again, the rendering is a little bit slow. Hopefully we can pick the pace up here once we go to select our trade, because I've already got a couple mapped out. All right, there we go. Let's add one more item here. Control V on that. Now it's going to be change the strike to strike. And let's get rid of the plus signs and hit submit. So I'm making it as neutral as possible. That way I can use the same checklist for each strategy. Sometimes less is more, right? All right. I'm just going to go ahead and do the last will be the credit roll between 40 and 60%. And the reason being is because it just, you can actually have a unfavorable reward to risk ratio with the credit spread because of its probability. And you're trying to use this as kind of a sideways to up or sideways to down trade. In this case, it's going to be sideways to down, right? Because it's a bear call spread. So I'm just going to leave out the no earnings unless risk is greater than a 1-to-1. Because you can play these with earnings. However, there are better earnings strategies out there. So I'm going to put this credit has to be between 40% and 60% of the spread. 50-50 is what I look for personally, but I'm okay giving a little bit more up for higher probability, meaning out of the money is what is referred to, an out of the money credit spread. So that's a deep enough list, I believe. But it's cool because I can just go ahead and attach it to both the bear call and the bull put, and then we're going to go build some trades. Okay, here we go. So we are done. Checklist is over. Let's go to our strategies. And I'm going to click on the bear call spread, hit edit. And I'm going to add our vertical credit spread checklist to it. Scroll down here and submit. And since we're here, we might as well go to the other credit, which is the bull put side. Hit edit here. And add the vertical credit spread checklist to it as well. Now we're ready to go out and look for a trade. So the first thing I'll do is I'm going to go to the trade plans here. Let's get this open. I'm going to use an existing full trading plan, but I'm going to build a new one because we're going to build both side by side. So first trade that I found us is FAS, and I liked FAS. Oh no, excuse me, folks. Let's go to the bear call first, right? But we're going to come back to this one because that is our bull put. Now, FAS is pretty interesting, or excuse me, KSS is a very interesting situation. So this has come down, and it's kind of low basing here. And my expectations, I think in the next maybe the next week or so, this thing could probably get below 45. Maybe it moves sideways and it breaks below 45 and maybe retests, so on and so forth. So my outlook is it's going to get below 45 at some time, but between now and then, I don't mind it just kind of moving sideways. So let's go ahead and see what we have to work with when it comes to options. Let me close these up. And it looks like we got a bunch to choose from. I've got 3 days out, I've got 10 days out, and I've got 17 days out. So let's go back here and take a look. Now this ATR is at about $2 a day, so this thing can move pretty quickly. The further out in time I go, the more credit I'm going to get, right? So let's go a little bit further than 10 days. Let's see what we can do with 17 days. So I'm going to open this up. And folks, we've got awesome strike prices, 50 cents a piece. Now, according to our rules, we want to sell the call with a delta between 50 and 70. So remember, now here's something that's interesting. I'm thinking that this is going to be somewhere around the 45 range. right? Or excuse me, I got to be on the call side. I think it's going to be somewhere down in the 45, and this is about a 76 delta. So that's kind of where I want to sell because I think it's going to get there or lower, right? Now I could get away with the 46 and a half. It's 50-cent difference, which is, hey, that's close to 70. But I'll go ahead and do this 46 and a half just to be a little safer. So I want to sell that one. That's the between 50 and 70 delta, and I want to buy between 20 and 30 delta. So let's go over here. Here's lots of them between 20 and 30 deltas, right? We got actually we got two. Actually, so let's do the 50 just to make a round number, and we'll start there. I can move these as I go. So I'm going to buy this one. Hit down your control, hit buy. And you can see that we have ourselves a credit. I'm going to knock this down to 1. And let's take a look at our risk profile. Okay, so right now I'm risking about $1.92 to make $1.58. So I am in the 40% range. However, what if we notched this up a little bit? We said that I would do the 46 and a half for the delta, but we could reduce it. Let me go back here and open it up to the 50 and a half. So let's see what happens if I do that. And I can do that in here just by pulling this down and jumping up one. All right. Now, we're not gaining much. We're not gaining much on that. The chances are we're probably going to be best by selling the 46. So I'll go back to the 50 here and see what happens if I sell the 46. Still not really giving us too much, is it? Still not going. So let's go one more time and take a look at another choice. Oh, 46 and a half. Sorry, folks. I need to get to the 45. That's right. Now we're doing a whole like a $5 spread here. Now this is starting to look a little better. Risking 270, or excuse me, risking 230 to make 270. I'm happy with that. So let's do the 45.50 or 17-day out vertical spread. And all the information you need is right here. Once again, if we trade this, it'll be in the monitor tab, but I'm doing this as a whole position. So all we need is one number, which is the 270 credit. So let's go ahead to our trade bench and start typing this stuff in here. So our symbol on this is KSS. Put a dash on this. This is going to be, that's 5 July 2019. 45. Or since it's going up, I'm going to do 45/50, or it's going down. Sorry, folks. Bear call spread. Now, guys, now I put this in as a 45/50, right? But you'll know which one you're buying, which one you're selling. Sometimes it might feel better to put the higher strike first and then go 45, and then do the lower strike after. So you go 50/45, thinking it's going down. So you'll know, okay, that's what I'm after. I'm trying to sell the in the money, the 45, and buy the out of the money, which is the 50. So however you want to word it, but there's what we're going to do. Now here is something we haven't done yet. We get to choose short because this is going to make money as it goes to 0. All right, so let's go ahead and select what it is. It is the bear call spread. Up pops our checklist. Yes, we definitely did between the 20 and 30. Our credit between 45 and 60 is now slightly for us. We're making maybe 52%, risking 48, so that checks. Select expiration less than 3 weeks, definitely. We're about just over 2. And then the deltas between 50 and 70, we nailed that. Okay. That's the strike delta. Yeah, we did both of those. Sorry, that confused me because they weren't in order this time. Okay, so the checklist works. The next thing we need to do is we need to jump on our platform. Our planned entry price is a credit of $2.60. Our planned target price is 0.01 because we want that to go to max loss. And we have no stop, 0.01. So let's see if this will accept this for now. Hopefully it will. Oh, that's good. So now we need to put in our position sizing, and this is going to be based on what our risk reward is. So let's just stick with the one contract for now. And it's easier just to go to the order quantity for this. I'll go backspace, let's hit 1. Click on that, and it automatically does it for me. says, hey, you're planning on taking a little bit more risk than previously said. Oh, we need our multiplier. There we go. So I'll put this in as one contract. Let's see if that changes things. Yep, a little bit. Cool. So it gives us a total risk amount of the opposite, right? 260, including the commission, is going to be 245 bucks. We know we're risking 235, but you add in some commissions and it doesn't work. So planned stop price, I should have. Actually, there should be a stop price in here. Let's put it as $2.30. Let's put it as the max risk. There we go. Now I got to put this back in. Sometimes you just got to play with this bad boy until it allows you to do what you want. It's still messing with us. All right. Greater than the planned entry. Oh, a stop price. And we'll probably have to see if I can keep this blank, but I don't think it'll work because the stop price has to go further against us, but it doesn't understand that, hey, stop price is actually above it. So I was hoping this was going to work today, guys. It's still not working. Okay, oh, never mind. Our max loss is the full spread. What is our spread? $5. There, I knew I was forgetting something, folks. So I had an issue because our planned stop price, we're position sizing for max loss, which is the spread, which is going to be $5. Now, it automatically went ahead and saved it, but I'm not done with it, so I'm going to go ahead and hit edit. And let's go back to it. It's jumpy today, isn't it? All right. So let me break that down once again. Our planned entry price is for $2.60 of a credit. Our planned target price is for it to go to 0. Our planned stop price, we don't have a protective stop. Now, if you wanted to stop this out with like a $3 loss or a $2 loss or a $4 loss, you could type that in here. But since I'm doing max risk, I put in 0.01, which I should have put in $5 because that is our total max risk, is the full $5, which is the spread. Remember the class you just took, and this will make sense. So now the numbers start to work. It does give me an order quantity saying that I can actually buy 458 shares based on what I've set up with my Thinkorswim risk, but I'm going to change that when we go to place the order. So it's breaking down my commissions, all the other stuff. We need to be, okay, this is a 0 to +1 or -1, so I'm going to hit a -1 on this. Let's see. What else can we see about this, folks? Let's jump back out to the chart. Definitely a low base. Let's put that down. Let's see, low base. I won't spend too much more time on it. All right, now let's talk about some of the comments on this. Get rid of my underline. Expecting sideways to down over the next 17 days. We'll exit on expiration date. Now, I'm not going to type this in, but you could put your rules here. If between strike prices, buy back the higher strike or the lower strike, right, because it's in the money. If it's above both strike prices, do nothing. Same-day substitution for max loss. If it's below both strike prices, do nothing. Both calls will expire worthless for max gain. You know, you could put all those details in there if you want, but for time's sakes, I won't. So now I'm going to hit submit, and we have our first trade in our trading plan. We got our first plan set up, waiting for confirmation. So there it is. So that is our calls bear call spread. So let's go to the first one I showed you, FAS, bull put spread. All right, so here's FAS. This is going to be our bull put spread. Now this thing moves a lot too, $2.30 a day. And what I see is like I can see this thing maybe getting to the 75 mark. I like the shallow pullback. So sideways, maybe it'll move around, but I think it gets above 75 in the next, maybe, let's see what we have to choose from. It's going to be shorter term, I believe. Oh, good. This has got weeklies as well. So 17 days just seems like much. 3 is way too soon. I'm going to hit 10 here. Okay, so 10 days. I'm thinking above 75, right? We're on the put side. So I'm going to have to go here and sell the 75s, right? Now let's see. Now that delta, it's between 50 and 70, so that works. So it works that my target has also got the right delta. So I'm going to go ahead and hit sell on this. Then I got to look for a delta right around 20 or 30. Let's see if we did another $5. I like that. Yep, it's between 20 and 30, so I'm going to go ahead and buy these to compensate. Let's bust this thing down to where it's 1. Makes it much easier for us to deal with. Let's go to the risk profile on it. Okay, risking 288 to make 212. Not quite in our favor. Maybe we can monkey with this to get it in there, but I'm okay. I'm actually okay with a little bit more risk on this, just because I'm not asking this to do too much past 75. I mean, opening up our risk a little lower or a little more doesn't make much sense to me. So I'm actually okay with this. I'm actually okay with that risk reward. So let's put in the numbers. We're thinking of a $2.12 credit. We are going to do a 75.70 bear put spread that expires in 10 days, which is the 28th of June. Hopefully you guys remembered all that, because I didn't, which is why we can go back and forth. So let's start a new trade plan. This is going to be FAS is the ticker symbol. This is a 28 June, right? 2019. Did I say 75? Now I'm going to do it the other way because I want it to go up. So I'm going to go 70/75 bull put spread. That should work. Let's see if I got that right. Yep. FAS 28 June 70/75 bull put spread. Looks really good. Now once again, it's a credit, so we get to click the short button. This is the bull put spread, so I'm going to go ahead and click on the credit. It pops up. Now from our previous mistake, I know what boxes to check, right? Or down below when it comes to entry. Check the same boxes. This all worked out really well. Let me scroll. Let me go ahead and, since I'm here, let's do this times 100 multiplier. I'm going to use my good old trusty Thinkorswim. Now my planned entry price, excuse me folks, was for the 212 credit that we had right here, right? It's 211, but I'll call it 212. So we're going to go to our 212 credit, 2.12. Our planned target price is for this to go to 0, but it doesn't like 0 times 0, so you have to go 0.01. Now our stop loss is maximum risk, which in this case it's the 70/75 $5 spread. It seems to like it when we do this. All right, very good. So it gives me my order quantity. I can do 381 shares, or in this case 3 contracts to stay under this $109,000 risk. But yeah, that's a little much. Probably going to do a little bit less than that. You know, it really just depends on how you set up your broker, remember? Okay, so this is a bullish trade, but it's slightly bullish. It's a +1. Now, if you wanted to, guys, I didn't put a 0 in here as far as a label. You can put a 0, so you can say 0 and +1, 0 and -1, so on and so forth. I just figured 0 is implied. Maybe we'll add the 0 button when we get to condors and butterflies, right? Some of those things you're going to learn here moving forward. What was this pattern? Let's take a look at it. Let's say, kind of ascending triangle pattern, consolidation, you know, whatever floats your boat. Let's do both. So I'm going to say consolidation. Let's do ascending triangle, if I can find it. There it is. You can do high base, whatever. Oh, that's enough. Okay. And we'll type in our rules. I won't get too big into my rules, but we can type them in. Expecting price above 75 in 10 days. And once again, we could put in exit if it's in between strike prices. If it's above both, let it same day substitute for max gain. If it's below both, let it actually that'd be the same day substitute for max loss. You could do whatever rules you want, but I'm fine with this. Okay. So one last thing I'll do. I'm just going to pick one of them because that's going to be kind of fun. Might as well do the, let's do, which one did we just set up here? FAS. Okay, let's say that it triggered. Yeah, let's say it triggered. So here we go. We're looking at our chart. It triggers out. We go, oh gosh, we got to add the order. Now that these are all positioned, ready to go, let's go. Let's add the order. Looks like FAS did break out. And then it's going, okay, what did you really do? Right? It says, target price is at 1 cent, 5, it keeps all that. What did you really do? Well, the date will be automatic. Let's go. We only did one contract. The fill price, we did get the 212, or let's say we got 215 for it. We got an extra little bit for it. Well, see, takes it all into consideration. It's really nice. Triggered. Blah, 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 whatever you guys want to put. Hit submit. Now, it's way cool. It goes to my open orders. Right? So it goes to my open trades. But guess what? If I go back to configuration and go to my use existing full trade plans, it'll be gone, but guess what'll still be there? Coals. It's like, all right, well, we'll come back to you later. So I go to my open trades because I just opened that FAS. Got to find her. There she is right there. And let's get out of it. Let's say that we exited and it expired worthless for max gain. Order quantity 1, fill price 0.0. Submit. Pretty easy. These are basically, they're really easy when you're doing a net in, net out, especially for software that's not designed for options. Okay, so here was our trade summary. This is our breakdown, potential risk rewards, all of that, and then here's what really happened. We got in. I know the dates are the exact same, but they wouldn't. Commission, we paid about $13.90 multiplier times 100. We profited $200 after commissions. Not bad. Here's what we were expecting. This is the history, and with our notes, so on and so forth. All right, guys. I'm not going to walk through the other one. I think you're getting it. I think you're picking it up, and hopefully, if you've got any questions, let us know, and I will talk to you next time. Bye, everybody.